guys, and welcome back to another video from the Bull and Bear Analyst. Today we're looking at the Nasdaq100 futures chart. Just before we begin, as usual, if anyone is interested in joining my free market analysis group over on Telegram, please feel free to scan the barcode on your screen. Right, going back to the Nasdaq100, current trading at around 11,978, almost at 12,000. We're actually at 12,000 just a few minutes ago, and we are up nicely 2.6%. Right now, thanks to the CPI readings that just came out and the inflation figures being cooler than expected. Very good news for the market. I did mention yesterday the market was anticipating this for the past 4 days, and now this is where we have that move towards the upside, and we are seeing this right now. So very interesting to see the Nasdaq100 go up all the way to the 200-day EMA. This is where we're going to be aiming. Right now, we did break above the 50-day EMA. We're looming around this area and around our long-term trend line, since the 29th of March. So this is this is the second time in a few months that we actually broke above this. We had one here around the 30th of November, and now this is our second time. We're just going back up to the 200-day EMA. This is going to be our next target. Now, what can slow the Nasdaq100? What can slow the S&P 500 and the stock market in general is the FOMC meeting and the Federal Reserve coming out and having that meeting. And the reason people are scared of that is because Jerome Powell is probably going to be, scaring investors and, just, I don't want to say slapping them in the face, but like just giving them that hard realization that they don't like the stock market to go up right now, and they don't want to say it. They can't say it, obviously, as a Federal Reserve, and it's just against capitalism. But what they can do is they're gonna be like implying that they just don't want people to have money at this time of the year, or this inflationary time. And the reason for that, it causes a lot of inflation, a lot of spending is going to be happening if the stocks are up, and the Federal Reserve are going to combat this to reduce inflation. This is the primary target and the primary goal of the Federal Reserve. This is the main job is to control inflation. This has been happening since the 70s, even before. But this is what the Federal Reserve want to do. So they will be happy if they see the market go down. So I think they're going to be scaring investors. They're going to be throwing cold water in the investors' faces. And that might push the market slightly down. And I think this is going to be where we see the market go downwards from there. Now, I could be totally wrong, just like I could have been totally wrong about the inflation figures. But we could have a good meeting. We have a decent meeting where he says good stuff about inflation and the rate hikes, and we can see a harder rally going into the Santa Claus rally, and this could be the perfect catalyst for it. So, yeah, will be very interesting to see. We can't really predict what the Federal Reserve will do, but will be very, very volatile for sure. That's something we are sure of, especially in the next 3 days. After that we have the jobless number on Thursday. So, yeah, be very interesting to see what happens to the market, especially this week.